What's good, y'all? It's your guy Bendu, and today I'm coming at y'all with another episode of Tox Talk. And again, back with my guy Alfred. Go ahead and introduce yourself again, man.
Hey guys, I'm Alfred. I'm out here in sunny California, and we're going to talk to you about some rule changes to the SEC Rule 801 today.
All right, man. Yeah, I'm looking forward to talking to this. And also before we get started, I would like to let the audience know that me and Alfred are actually going to be doing another show this Wednesday. It's like a stock show, and basically just explaining to people with low capabilities to invest in the stock market, like you don't have a lot of money but you want to invest in something. So we're just going to run through that and talk about that a lot on Wednesday, so definitely tune in for that. But let's go ahead and dive into this. Oh yeah, go ahead, man. I'm sorry.
Yeah. So, I mean, also, we're going to be talking about penny stocks and some crypto and stuff, things with, potentially high return.
Cool. Yeah, so definitely look out for that on Wednesday. That's it's gonna be a dope show. So yeah, let's go ahead and dive into this. This is the SEC's Rule 801. And this is kind of just going into what we talked about last week with the counterfeit stock shares and everything. But we're just going to further go into how the SEC is, not going to not going to enforce this. But go ahead and explain to them what Rule 801 is, bro.
Well, we certainly do hope they do, but I mean, at the SEC, it's all about selective enforcement there and protecting their own. But so the SEC proposed some rules, a change to Rule 801 that was basically a result of the GameStop, debacle. So part of it kind of protects the hedge funds and those that are, making these short bets and whatnot. But part of it also protects the public to a degree. So what they are requiring people that are doing shorting, they're requiring them to basically put more money up front to actually be able to short the stock. And they're calculating on a daily basis instead of a monthly. And they're calculating how much money you have to put down to have extra money liquid into your account before you can start making all these crazy shorts.
So oh, sorry to cut you off, but so they're actually like kind of making them, act like normal people that invest in the stock market. Like you actually have to have money to invest.
Yeah, exactly. So it's limiting the ability of these large hedge funds just to short every stock known to man and have and pose very little risk. It's different than naked shorting. They're still shorting, but with shorting, you have to put money up. With naked shorting, you don't put up anything. You just counterfeit the stock. Here with shorting, you got to put money up, and the SEC's new rules, you got to put up more money, basically. So it's going to limit the practice of shorting. There's been a lot of speculative videos saying that March 19th was a big bomb day and everything. Obviously, that never happened. But and I don't expect this to have a huge impact on the share price. But what I do expect, or what I do foresee, is that it's going to seriously limit the practice of shorting. And it'll help, healthy companies kind of thrive a bit more. Anyway, that's what I'm hoping to be the outcome.
Now, isn't this what, Hope and Change Barack Obama talked about when he came into office, was applying, regulations and rules like this in the first place when Wall Street basically like tanked the fucking markets?
Yeah. So it's a little bit, hopefully a little bit more than just hope, because the SEC is instituting the rule. It's quite likely that they're going to require this for all companies and whatnot. And we're looking at, probably the trigger date starting for this whole proposed change would be April 19th, which is 30 days after March 19th. Okay. That's when I expect to see there to be a decrease in the volume of shorting, because the shorting volumes are still very high for the penny stocks that we're speaking about.
Okay, gotcha. So how would this, so I guess my next question would be like, would this be a route to make people trust in investing more? Because I feel like, especially with the last video, a couple of the comments I read, a lot of people just don't trust investing and investing anymore.
Yeah. So, I mean, here, for me, I mean, companies that I believe in are companies that I invest in. And I primarily focus on penny stocks because the rate of return is a lot better. The risk is higher, and the fluctuations are greater. But I think this is going to really damper the amount of just, crazy speculation that was occurring in the shorting volumes anyway. So I think it's going to make the stocks healthier, make their rises a little bit more consistent rather than a big rise and a sell off. So I'm hoping that this is going to, restore people's faith to some degree, but actually make people realize that, these stocks are safe. So I hope it does have some positive change.
So I guess the next question I would like to ask you, Alfred, is like, we kind of covered this in the last video, but not enough, in my opinion. So who exactly profits from this? Like, who can we point the finger at and basically say, hey, fuck you, we're going to get you out of here? Who is that?
Okay, so for the naked, so shorting is primarily done by a group of hedge funds that do nothing but short. Naked shorting is done by the a couple of prime brokers such as Citadel and Knight in conspiracy with the DTCC, the Depository Trust Clearing Corporation, which clears all the stocks. So those groups counterfeit the stocks, and then they first take large short positions and then flood the market with a bunch of counterfeit shares, and then when the stock goes down, then they sell their share, or then quote buy their share, and so they sell it high and then they buy it low. So that's the shorting. And naked shorting is when you post nothing to actually short the stock. So they DTCC and the market makers such as Knight and Citadel, they profit primarily through the fees that they charge for the trades, the interest and the loan money that they loan out, and any transactions that occur in the transaction fees. So that you're looking at, the market makers making 8 to 10 billion a year on this, and the DTC making 6 to 8 billion a year just on their fees associated. And then of course the hedge funds that are doing the shorting are making a way more than that. They're making 80 billion a year or whatever it is, but they're making at least 10 times that, or actually close to 20 times, because so we're looking at maybe 80 to 150 billion in profits for the shorters.
And that's basically like a transfer of wealth going on, because that's coming from.
Oh, absolutely! It's a direct transfer of wealth from small enterprising emerging companies into the pockets of Wall Street. And the SEC doesn't do anything because, well, the SEC is staffed by the people that are doing this crap.
Yeah, they're basically bought by the people they're supposed to be regulating, which is insane. And
yeah, exactly.
that kind of leads me, I guess, to ask this final question, which is like, why do you think nobody is talking about this? Like, even in the YouTube space, like we kind of like, I have my personal, reasonings on why the mainstream media is not talking about it, but why is like independent media, especially left media, not talking about this?
Well, I think part of it is, they just think the stock market is just for billionaires and whatnot. But, I think the other part of it is it's pretty complicated. I mean, we're doing a basic distillation of what is going on so people understand it better. The actual mechanisms are, obviously more complex and whatnot, but, I don't think it's getting the proper, attention, because people don't understand it, and they don't know of it. They don't realize that the SEC allows this. So I think it's just an unknown practice, basically.
Gotcha. Okay. Yeah. Because, in my mind, and it's like, I don't have issues with, people talking about like social issues and everything. Obviously that plays a big part in our society, but it's like, you rarely hear a lot of the left talking about things like this. And I feel like these things are important, especially things of, economy and everything. And I think that kind of goes to my point. Yeah. I think that goes to my point. I was telling you, like, I feel like Matt Stoller says it best. A lot of the left doesn't know how to do anything when it comes to business. And I can't help but agree with that, so.
Yeah, and this is important because this is just another way Wall Street screws people without them realizing. The other one is, secret inflation and all that. I mean, but this is one where people don't even. A lot of people understand inflation and how they're getting robbed that way by, by watering down the American dollar. But people don't understand this method of, fleecing small and upcoming enterprises to just enrich Wall Street's hand and do nothing other than, sabotage these companies.
Definitely.
Yeah.
All right, man. So, Alfred, I want to thank you for coming on the Talks Talk again, man. It's always a pleasure. I can't wait to do the show with you Wednesday. Definitely, guys, look out for that. It's going to be on here. We're going to be talking about, more, if you don't have if you don't have necessarily like a large capital to start out with and doing the stock market, we're going to explain to you that. We're going to be talking crypto, penny stocks, all that. So definitely tune in for that on Wednesday. Yeah, Alfred, unless you want to shout, is there anything you wanted to shout out for yourself?
No, that's it, man.
All right, guys. All right. Well, thanks for tuning in. Peace.